Hey, Kevin here, top 100 financial advisor and best-selling author, and we are here to talk about the stock market. Today, we need to talk about SoFi. It is a very popular fintech company that might be ready to pop after this weekend. And so I want to tell you a little bit why that could be the case, what I like about the company, what I am doing about this particular stock, and then why it's just so popular to begin with. All right, so let's go ahead and get to it. So first, SoFi is ticker symbol SOFI. They are a fintech company, financial technology put together, you get fintech. And one of the most enduring and cool things about it is they have really shaken up the banking industry as well as others. But they're now just got a charter to become a national bank. So they're a bank, they're in crypto, you can invest in the platform, but they really made their name off of refinancing, particularly refinancing student loans. That's how they got their name. Basically saying, look, student loan debt is trash, and it is. We can help you pay off your debt sooner by taking your interest rate of 7%, whatever it was, making it a lot lower. You can pay it off a bit faster. Welcome to SoFi. Social finance. That's how they got started, and they begun to add on to those suite of services. So they started off with loans, then personal loans, now home loans, then investing, then crypto, and you can see how things really grew. Then you add in a savings account, and it's like, oh, y'all are growing pretty quickly. This is really cool. You don't have any physical branches, you don't need anything like that, and then you add in what's going to happen this weekend. The Super Bowl is this weekend. It's the biggest sporting event in at least the US, especially for one single day, and it's hosted in Los Angeles at SoFi Stadium. This is one of the reasons why some think like, hey, if you could have gotten you some shares this week, this might be the time, because the name is going to be out there. You're going to hear SoFi, 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 not only on Sunday, but Monday, probably up until Wednesday, because it's going to be running over and over on ESPN and everywhere else about what happened at SoFi Stadium. So the name is going to be out there, and some are thinking like, look, this is the time for this investment to pop. Now, personally, I like the business of SoFi. I like that it's tech focused. I like that everything stacks on top of each other, meaning that if I have a SoFi investment account, which I do, I don't have much over there, but remember when I said I bought shares of Revvion, they gave me the pre-IPO price. That's pretty cool. So that's how I got my SoFi account. Now, if I were super inclined, maybe I would get my bank account there. And then maybe eventually down the line, I'll get a credit card. You can see how one thing starts to kind of make you a customer of all of their products. And that is the point. Similar to maybe an Apple, where you get, you got the phone, you might as well get the watch. Eventually you get the computer. Next thing you know, you're looking up streaming Apple TV while listening to something on your Beats headphones. All these things connect together, right? So they're trying to do a similar thing when it comes to banking and make it more social, make it more accessible, make it more fun. And that's cool. That's not what JP Morgan is doing. It ain't what Bank of America is doing, and they're taking it in a different direction. So if you were to tell me, without looking at how well the stock has done in the past, you just take that away and say, hey, would you invest in a company like this? My answer would be absolutely yes, I would. Except there are some things under the hood that you might want to know about before you consider investing in SoFi. So first off, now I'll pull out my phone. I'll put the graph up here too. You can see that the waves in SoFi, it's pretty violent, where you'll see a super swing up right around that $20-$25 range, and then a strict correction where the thing will absolutely tank back down to $10, $11, $12 a share. And over the past year, and I'll post this as well, just to make it a bit simpler, it's down 46% over the past year. And they just went public in 2021. It's 2022, and this is very, very early in the game. So I can make the optimistic play and say, look, if I get this now, maybe 5 years down the line, it's going to be something really big. And that's fair for the long term. But if you are not willing to sit around and take a 46% loss, as we've already seen, we don't know when and if it'll hit the bottom, then you want to be aware of that. It can absolutely be a longer term investment if you choose to have it in that bucket. But there are a few other things that you want to know. Number two, I guess it's number two if I'm doing numbers here, but they have $3.5 billion in debt. That's not all that great. Now, remember, they're still relatively new, so it's not the worst thing in the world. A lot of newer companies take on debt now and try to grow aggressively. They just reached over 3 million customers, which is good because you're pretty new. You got 3 million customers. You are probably going to grow well beyond that. So, yes, they are growing in terms of the amount of people that are coming onto their platform one way or another. Perfect. They also got $3 billion worth of debt. And here's the kicker here. Interest rates are expected to rise. They're expected to rise at some point in March. What also happens in March? SoFi announces earnings on March 1st. So it's a lot of stuff going on right here. If things go well, perhaps SoFi takes off a little bit. Maybe you can make a little money. Or maybe not, because you never know how these things are going to go and how it's going to react with interest rates. Because if I already have $3.5 billion worth of debt and I am losing money, SoFi is currently losing money, which again, is not great now, but those losses are narrowing. They're actually expected to make their first profit in 2024, which is still 2 years away, but it's not 10 years away. So again, if you're getting it now, then perhaps in 2, 3, 4, 5 years, you'll be looking real nice. But again, you want to know that up front. What you don't want to do is invest in it, let it drop another 25%, and then look around like, hey, what happened? So I'm telling you up front, right now, that they're not expected to make a profit until 2024. But also with interest rates rising and their primary product is loans, that's something you want to be concerned about. Because remember what the purpose of raising interest rates are. It is to slow down the economy to prevent further inflation. It's to tell people, to say, hey, slow down, maybe not buy that new car yet. Maybe not, take on that business loan. Maybe not buy that house just yet, and just slow down a bit, because we had too many people doing it last year and the year before that prices absolutely exploded. Like used cars are up 40%. That's absolutely ridiculous. Y'all need to slow down. I need to slow down, right? So when we talk about SoFi, your primary product is loans, or are loans rather. So number one, that means you're going to pay more money, more interest payments on the $3.5 billion that you owe. Okay, so that's one. That's going to automatically cut your profitability a little bit, because you're going to have to pay more for the debt that you already have. But then also, if your primary product is loans and you want people to refinance their loans and do all that kind of stuff, are they going to be as willing to do that now once interest rates go up? That's a question. We'll see, right? It made way more sense to refinance between now and over the last year and a half, because rates were low. They cut rates. They got really low. They're definitely not going any lower at this point in time. So I'm going to go to SoFi. I'm going to go refinance. And that's how they got up to 3 million customers. Now that rates are going to go up, if I've already refinanced, I'm not moving, right? If I can't get an amazing rate, I'm not moving. And rates are only going to go up. So I'm not entirely sure if there is a great catalyst right now in 2022 to hop into a company like SoFi, unless again I have some money to risk. I have some high risk money. I'm not going to touch it for several years. It might not be a fit for right now, because also the entire fintech space is in the exact same boat. For whatever reason, I don't necessarily think that a SoFi should be, down 46%. That's a little aggressive. I don't think it should be down that much. I also didn't think PayPal and Square should be down as much as they did, even though Square did have a pretty good week. Block. Square Block, they changed the name. I don't know why they changed the ticker symbol. Time for another day. But you guys get the point. It's a risky move. And I think if you're going to invest in SoFi based on the true and verifiable information that we have. That's how much money they're making. Perhaps you're waiting until earnings so you can find out if they are continuously growing or not. What I wouldn't do is just say, oh, it's Super Bowl weekend, I'm just going to go for it because the stadium has their name on it. Because that's not necessarily the best indicator. For example, in 2018 for the Super Bowl, that was in Minnesota, US Bank. It was US Bank Stadium. US Bank is publicly traded. How did it do? Right, it didn't do all that well, right? At least right after the Super Bowl Sunday, it just fell apart. I don't think it has anything to do with whether the stock does well or doesn't do well. Last year was at Raymond James Stadium. Did y'all even know that Raymond James was publicly traded? Did you even care that the name of the stadium was Raymond James Stadium? I didn't even know Raymond James was even publicly traded until I did this video and had to go back and look it up, and it is publicly traded, and it did happen to go up. But that to me is just circumstance. It just happened to have gone that way. I don't think it's, hey, it's on the name of the stadium, therefore the stock is going to take off. So the game is about the players on the field, not necessarily the stadium that they're in. When the Super Bowl was played at AT&T Stadium, I'm assuming that happened. I don't know that because I know the Cowboys wasn't in it, but assuming that one was played at AT&T Stadium. But anyway, the Cotton Bowl is played there every year. That I know, right? I don't think the AT&T stock takes off every time a game is played there, or a bowl game is played there, or a championship game is played there. I don't think investors really care what company has their name on the stadium. I think what's most important about SoFi is, are you continuously gaining customers? If that happens and we find out March 1st and the revenue continues to go up and those losses continue to shrink, then I'm pretty sure that the earnings call will go well. But again, I'm more concerned about interest rates and how that is going to affect this company and how investors are going to react to the two. Because if you ask me, it falls more into the finance space than just the tech space, and most finance companies are going to be fine. This one, though, not all finance companies got $3 billion or $3.5 billion, however much it is, in debt. So, there's that too. If I don't have that level of debt, I might be more flexible to offer more loans and to have more of an established business, which they do. And SoFi does not just yet. So that is my thoughts those are my thoughts. A lot of grammatical errors today. My bad. It's late. It's Friday. More tacos. So coming back to SoFi though, I need more support. Meaning I need a more significant swing moving forward for me to really trust it. It's something I have on my watch list because I do like the company. Same thing with Block. I complain about it a lot, but it's still on my watch list. When they act right, maybe I'll come back, right? You don't lose 60% and me just be okay with that. So just keep it on your list. I can't come out here in confidence and say that yes, you should have bought it or you should buy it because of Super Bowl. That doesn't make sense. If you're more of a technical chart reader person, then $11, anywhere between $11 and $10.50, that would be the price that's the quote unquote good price to get it at in my estimation from what I look at it. But again, it's a little too risky for me. All right, so that is it for me. Let me know what you think about SoFi in the comments below. All right, talk to you guys later.